What's going on, guys, and welcome back to another video. So in today's video I want to do something a little different, and I created a rough Excel where I put out my trading 2-on-2 portfolio pies, all 12, and I've made out a list of firstly what portfolio pies I have too much weightings in, what portfolio pies I don't have enough weightings in, and also some pies that I believe I need to add more positions to. Also, with humans being very emotional in terms of trading, and to be honest, one of the main reasons why a lot of people fail in long term investing is because they can't control their emotions. So, one way to counteract that is to set up a set of rules for you to follow and not invest just kind of for the sake of it as such or for fear of missing out. So, I've put in two rules so far that I will show you in this video of what I want to follow before I invest in anything going forward. Again, as a long-term investor, being able to control your emotions and follow a set of rules is extremely important. So with all that being said, let's dive right into today's video. So you can see here on screen the Excel that I put together a few minutes ago. It shows all 12 of my portfolio pies in terms of sector allocation. It shows we have 29 holdings overall, with an overall current value of just under €4,500, which is about $5,000 or so. And we can see here as well the percentage overall portfolio allocation to each of my sectors. So we're going to go through each of these sectors in detail, and I'll explain what these color codings mean later on in the video. I really find it very helpful to just have a kind of a brief synopsis or summary of your overall portfolio on a blank Excel in terms of seeing all the kind of numbers and charts, etc. on your brokerage. So first of all, communication services. If we dive into my portfolio, we see here that we have currently 3 holdings in the form of Facebook, which is up 15.5%, Walt Disney, which is up 2.06%, and AT&T, which is up 3.17%. We see here that it makes up about 12% of my overall portfolio. We then have my consumer discretionary, which we can dive onto my portfolio and see we have 2 holdings with Tesla up 11.17% and McDonald's, which is down just under 1%, and this makes up 4.09% of my overall portfolio. With my consumer staples, it makes up about 4.5%, and we are currently up 2.15% with our 3 holdings being Coca-Cola, which is up 0.81%, PepsiCo, which is up 3%, and P&G, which is also up 3%. My energy pie is currently down 2.44% with 2 holdings. ExxonMobil is down 3.5%, and Chevron is currently down 1.37%. We can see here that it makes up 3.33% of my overall portfolio. Next up is my ETFs, which we have 2 holdings, and it currently makes up about 13.12% of my overall portfolio. We can see here that we are currently up over 6%, and the 2 holdings are the Vanguard S&P 500 ETF, which is up 6.38%, and the Vanguard FTSE 100 GBP, which is currently up 3.08%. Now this is the one kind of pie, if as such, that I don't really mind if there's only 1 or 2 holdings, as obviously the ETFs make up, for example, my Vanguard S&P 500 is the top 500 companies in the US, and the FTSE 100 is the top 100 companies in the UK. So even just having those 2 holdings alone really does diversify across the majority of my overall portfolio investments. So that's kind of fine to just have the 2 here, so I'm quite happy with that. The financial sector is up next, and we're currently allocated 14.81% of my overall capital to this sector. We can see here that I am currently up 1.25% with my 5 holdings, being Visa, which is up 0.73%, MasterCard is down 2.77%, JP Morgan Chase is up 6.5%, Bank of America is up just under 1%, and Goldman Sachs is up 1.82%. My healthcare pie is up next with 3 holdings. It currently has 12.61% weighting, and we have 3 holdings, as I said, with Johnson & Johnson down 1.66%, AbbVie up nearly 9%, and Pfizer is down 1%. If we go back here, my industrials, 2 holdings, currently makes up only 2.31%, and those 2 positions are 3M, which is pretty much break even, and Caterpillar, which is up 9.7%. Next up is my materials, just a 1 holding as such now. It's currently 2.89% of my overall portfolio. It's in the form of Barrick Gold, and we're up 4.8%. Real estate, we just have the one company, Realty Income. We're currently down nearly 3% in that. That's been quite volatile over the last few weeks, and it's making up 2.81% of my overall portfolio. My biggest holdings for now is in the technology sector. We have 4 holdings, and it makes up a massive nearly 25% of my overall portfolio in terms of weighting. So that's kind of one of the main reasons you should make these kind of pies or these kind of Excels, because it really does show you that you can be really overweighted in some sectors and you can be really underweighted in others. So my tech, we are currently up 11.5% in the form of Microsoft, which is up 8.49, Amazon, which is up 8.28, Apple, which is up nearly 8%, and Alphabet, which is up quite an impressive 21.5%. And my final sector is my utility pie. It makes up about 2.5% of my overall portfolio. And if we just scroll down here, we can see that it's currently up 7.21%, and the company is Waste Management. Another thing that I mentioned at the beginning of today's video is that I want to start to put together a set of rules that I'm going to adhere to in order to really kind of keep emotions out of trading as such. So far we just have the 2 rules as of now. Firstly, I want to have 5 holdings max per sector. So for example here, the only company that we currently have 5 in is the financial sector. So if I did want to add another position, or I believe there was a very promising financial company on the horizon, or a company that I found really undervalued, then if I wanted to add it to this pie, I'd have to take out the worst, or the one company out of the 5 that are currently there that I believe is the worst performing, and replace it with the new improved company. And definitely that will happen over time, especially as a long-term investor, as the fundamentals of companies change and their values become under and overvalued over time. So I'm going to keep it the capped of 5 holdings overall. And the second rule that I'm going to start to adhere to also is in terms of my dollar cost averaging. Now, I mentioned in a video last week where I was going to wait until any of my positions drop below 5% to start investing more to improve the dollar cost averaging. But after thinking about this further and realizing that over time, especially as a long-term investor, that a lot of your positions after, let's say, a year or 2 or 3 won't really drop back into the red anymore. They might hover about 1 or 2 or 5% in the green, but like over time, blue chip companies, they won't really tend to go back into the red unless there is some really big economic factor. For example, last March when the crisis happened. So for that reason, I'm after dropping my dollar cost average down to my new holding of 3% in the red. So once any of my positions, so far 29 of those, if any one of the 29 drop below 3% in the red, then I will start to invest further into these to help improve my dollar cost averaging. And if none of them do for, let's say, a week or 2 or 3, well, I'll just start to pile up my cash reserve and really hit it on the brake then when it does go down in the red. So it's kind of more of a patience game as such, especially as a kind of long-term investor. It's not really, how would I say it, it's not really exciting as such. It's more kind of patience and kind of have a long-term mindset. And you'd really see over the long term how fast your portfolio will start to grow, especially when you have dividends as well and the compounding effect of those. And probably one of the main reasons why I made this Excel was to see, firstly, how many portfolios or sectors, pies, that I need to invest further in, how much positions or pies are over allocated in terms of weightings, and how many are under allocated in terms of weightings. So firstly, in terms of companies or sector pies that I need to put more positions into to help diversify further, is you can see here the kind of yellow colors here. So we have consumer discretionary, which only has 2 holdings at the moment. My energy sector has 2 holdings. ETF has 2, but again with ETF, as that currently has about 600 companies when you combine the 2 ETFs, that I'm kind of quite happy just to keep that as 2 for now. My industrials only has 2 companies. Materials and real estate only have the 1, and so does utilities. But it's not just the number of companies I have per sector pie, it's also got to do with the weightings. So you can see here, also in the energy sector is a company or sector pie that I currently am under allocated in terms of weightings with only 3.33%. And it's the same for literally the other companies as well that only have 1 or 2 positions. So industrials is only 2.31%, materials is 2.89%, real estate is 2.81%, and utilities is only 2.4%. So I really need to take that into consideration as well when I'm picking more companies to invest in. We also have some pies here that I have over kind of weightings in. in the form of communication services, which is about 12%. Financials, my ETFs and healthcare all have between 12 to 14 or 15%. And also my tech pie, even though I haven't really invested into this pie as such in the last few weeks because they've all been doing quite well, so that wouldn't really improve my dollar cost averaging if I invested further, but it's still sitting at 25% of my overall portfolio. So with that being said, in terms of next week's investing, I'm going to kind of focus in on my three pies that only have one holding in the form of materials, real estate and utilities. And I'm going to look for companies, once I do my own due diligence and research, to find companies, even to add in one extra company into each of these pies will help further diversify that sector. So the coming week, I'm going to, firstly, I'll have two investment goals. One will be to look out for any of my 29 current positions to see if any of them drop below the 3%, which could be quite possible considering that the US elections were decided over the weekend. So that will probably still keep the market volatile for another few weeks. So that will be my first goal, to look out for any of my positions under 3% in the red, or over 3% in the red, should I say. And second of all, I'm going to look for companies to add into materials, real estate and utilities, and I'll definitely let you guys know what happens in that regard. So with that being said, that brings the end of today's video. If you found it any way helpful, it'd be great if you would consider smashing that like button. And as always, if you're new around here, it'd be great if you consider subscribing to the channel, as we are 30 subscribers away from our next goal of 400. If you have any comments, questions or queries, please don't hesitate to comment below, as I'm always up for a chat. It got to do with anything financial or investment related, so I'd be more than happy to get back to you. Thanks very much guys, enjoy the rest of your weekend, and I will see you in tomorrow's video.